with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Chief Investment Officer at BIG Investment Services. That's BIG, Booth Investment Group, for full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Try and keep you up to speed with you and your money. And we're glad you're listening today. It is Friday, June 12th, 2026. It is the birthday of my lovely bride, Lynn. So happy birthday, Lynn. Got some big shout-outs this week, a mess of them. Mess of shout-outs this week. Tim, Ray, Judy, Jim, Jody, Penny, Rich. Also got a couple big ones, too. Got to give a big shout-out to Mike. Mike comes in the office this week. He says, David, at the end of your podcast each week, you say, get that second house, get that RV, get that boat. But then when we call and ask for the money, you say no. Fair point, Mike. I don't think I say no. All right? It's not just simply no. It's let's make sure we do this the smartest, most prudent way possible. Okay? Maybe it feels like no, but believe me, buddy, I'm always trying to find a way to win for our clients. Sorry it comes off that way at times. And then I give a shout out to Ed. Look, for those of you that listened last week, I made mention that I sent a note to Jensen Huang, CEO of NVIDIA, asking for a BIG shout out because he gave a shout out last week to one company and sent the stock up 50%. Well, lo and behold, Ed walks in the office this week and he has in his hand a note from Jensen Huang on NVIDIA letterhead thanking me for buying that video card back in the 90s and praising the fiduciary tutelage and guidance of our team here at BIG. Ed, I had no idea, my friend, that you were so well connected to the CEO of the largest company in the world, but that was awesome. I tell you, you guys are just the best. We love our clients. We've got the best clients on earth. We just love to serve you all. You're so engaging, and we really just appreciate the relationships we have. So thank you, everybody, for tuning in a week and week out. Thank you for your business and continued trust and confidence. So what about the market? Well, we're all out of time, so I'm going to go ahead and wrap up. I'm just kidding. I'm kidding. No, let's talk about the market. Things are more constructive this week. Were they constructive enough? The jury's out on that, but let's just run through the numbers. Dow Jones up 0.66% this week. The S&P 500 up 0.65. The NASDAQ up 0.70. The Russell Small Cap Index ripping higher this week. It was up 3.9%, so really pushing much higher this week on the Russell Small Cap Index. And honestly, I don't have a good reason for that, looking at the landscape and some of the news stories that came out this week and some of the interest rates concerns, et cetera. But hey, it pushed higher by a lot. It's the number one performing index of the market this year. And luckily, we have a nice, strong position in that. We thought small caps would be good for 2026. So it's one of our larger weightings. How about the other things we look at? The volatility index is measured by the VIX, down 17.8% this week, finished at a 17.7. We'll watch, see if that holds. TLT, long-term bonds, as measured by the TLT, up 0.8% this week. So they came up a little bit. Rates came down a little bit. Again, a little bit surprising. I think it's more war headlines than anything else. Some things we'll mention here in a moment. Gold and silver still not showing any love here. Gold was down 2.45% again this week. Silver down 0.45%. So they just cannot seem to get traction. And we take a look at the sectors. There's no real messaging this week. Let's just put it that way. We saw semiconductors have a huge rebound after just getting pummeled for a few weeks in a row. It was up 8% this week. But then we also saw staples, which are super defensive, up 2.8% this week. Materials were up 3%. Energy, which you thought would have gotten clobbered based off of the announcement here at the end of the week that things are coming to a resolution. Of course, we've heard this a few times, but maybe this time it's real. Things are coming to a resolution with Iran. But energy was only down 0.2%. I think there's a structural problem with oil. Everything that I'm reading, things don't look good. There's a huge pipeline facility in Oklahoma. It's like the largest one in the country. It's like the heartbeat of oil in America, it's running dry. It's running dry. It's getting down to dangerous levels as far as what's in reserves. And you just can't bring this stuff back online in an instant. I know there's some oil sitting in the ships in the Strait of Hormuz, but it's not this much. The oil that we've been producing has been going out globally, and now we're starting to get really, really low here in America. I think this thing could be completely resolved over the weekend, and everything would be back to normal with the Strait of Hormuz, and you could still see oil prices go much, much higher in the next couple of months. And I'm not sure the market's pricing that in fully. So we'll see. I'm listening to some smart people that say we've got a problem here with oil that's not really shown itself yet, and that the market's mispricing the risk here. So we'll see how that pans out. But look, bottom line is this: what moved markets this week? It's really all headline driven. So what were the biggest headlines? Well, the first and foremost is the war in Iran. Things really escalated earlier in the week. Missiles started flying again. Markets did not react well to that. You really saw markets come under pressure with all of that happening. That narrative has changed pretty dramatically here as of yesterday and today. We'll talk more about it in a moment, but that was a real heavy pressure on the market during the week this week, was the missiles flying, oil prices shooting back up again, et cetera, with the Iran war. Midweek, we got some inflation numbers, and boy, were they ugly. Okay, we got the consumer price index up 4.2% year over year. Take oil out of it, 2.9%, much, much hotter than what the Fed would like to see. And the producer price index, this is your wholesale inflation, right? Business to business, 6.5% year over year, just a huge move higher. And that could spill more deeply into the consumer prices as well. A lot of this is energy driven, but it's not all energy driven. And that's the concern, okay? Like I say, you take the oil out of it and it's still a hot number. This really puts the pressure on the Federal Reserve to not do anything stupid. And they've got their first big meeting next week with the new sheriff in town, Kevin Warsh, the new Fed chair. And look, I think that right now, you're not going to see anything in regards to rates. I think they're going to hold tight next week. You're definitely not going to see a cut. Everyone says, oh, the Trump's guys are going to go in there and cut rates. You just can't. You just cannot do it. You cannot do it in this environment. Things are just too hot. Inflation is too high. I just do not see that happening in any way, shape, or form. I think if anything, you're going to see the messaging from the Fed move to neutral, from a cutting bias to a neutral bias. And you may even hear a few folks talking more about potential rate hikes. So we'll see how all that pans out next week. I'm sure that's going to be a big market mover, but the inflation story was ugly and the market did not respond well to that at all. As a matter of fact, the market was really kind of getting beaten up over these inflation numbers before the headlines in Iran changed and turned positive. And the Trump administration came out Thursday afternoon. Market was not doing well, folks. It was down. It was down big. It was pretty ugly. And the news came out that there was a deal in the works and things are going to resolve themselves. Trump was suspending planned overnight attacks on Thursday night, and the market just turned and went higher pretty significantly. All of that said, oil didn't respond as much as you would have thought. It came down, but look, I mentioned to you on the week, energy only down 0.2%. We did not see the energy complex take it on the chin the way you would expect to see it, because I think they're starting to sniff out this structural problem in energy. I really think it's starting to happen. I think that we've got to watch out for that. This Cushing facility in Oklahoma, they're really getting low, folks, and it could spell trouble for us as we move forward. Then finally, the big headline of the week that everybody's been talking about, and that was the IPO of SpaceX. So it was a historic IPO, the largest one in history, 3 times larger than the previous largest one, which is Saudi Aramco. That's the world's largest oil company. They went public back in 2019. SpaceX was 3 times larger. A lot of hype over that, a lot of excitement over that. I saw a lot of the non-profitable tech stocks getting pummeled today. And I think it's because a lot of folks were selling their non-profitable tech stocks that are up a lot to go buy this non-profitable tech stock. So look, we did not participate, and I am not unhappy about it. Let me tell you why. I think this is great. I'm happy for Elon, another historic milestone. He's the first trillionaire on planet Earth. So kudos to you, Mr. Musk. You went from nothing to being the world's first trillionaire. Say what you want about him. You can like him, you can hate him. I don't care. He's accomplished much, and he really has. You got to give him credit where credit's due. The guy was sleeping in his office, just trying to make things happen. He was out there in a tent trying to help build the cars to meet production numbers and everything else. He gets after it. But I'm not buying SpaceX today. And let me tell you why. Look, it came to market today, priced at $1.7 trillion. It finished today at $2.1 trillion. It is the sixth most valuable company in the country at $2.1 trillion, just a tick behind Amazon. But here's what gets me about this, folks. And I've talked about this the last couple of weeks. I'm going to talk about it one more time. How much revenue did they have come in? How much money did they have come in the door last year? $18 billion. This stock is trading at over 100 times their revenue. Their revenue. Think matters worse. How about their profit? What does their profit look like? Their profit? Well, guess what? They lost $4 billion last quarter. So they're trading at over 100 times revenue and they are losing money. There's no profit. They're not making any money. And this is 2 times larger than Walmart. 2 times larger than Walmart, who, by the way, brought in over $700 billion in revenue last year and made almost $200 billion in gross profit. So you got a Walmart bringing in $700 billion, making $170 billion in gross profit, and you got SpaceX bringing $18 billion versus $700 billion like Walmart. $18 billion, losing money, and SpaceX is worth twice as much. Look, Elon deserves a premium. I understand that. He's brilliant. This company's going to do big things. No doubt about it. But it's not worth the price today, folks. It just isn't. And when you look throughout history and you look at all these other tech IPOs where companies were not making any money or even not making much money, maybe they're making some, not much or none at all, they all had 50% drops within the first year or so of their IPO. Companies like Facebook and Amazon, et cetera. So I think we'll get a much better price in which we can buy this stock at some point in the future. I will say that even when that price comes along, it's going to be a hold your nose and buy it. It's not going to feel good even when it comes down because Elon's Tesla has always carried a ridiculously high premium. It's never been a fairly valued company. And this won't be either. But there's a difference between buying it at an uncomfortable price and buying it at a stupid price. And today's price is stupid. So we stayed away from it. We'll wait for it to come down and we'll revisit at that point in time. I think we'll probably get a chance to buy it 50% lower sometime in the next 18 to 24 months. So we'll see what happens there. I will point out, though, that this company does have one major risk in its future, one huge risk, and they actually might be the ones to cause it. And that is Kessler syndrome. Kessler syndrome. This is the idea that something gets destroyed in Earth's orbit, maybe a satellite from a meteor or something along those lines. And then all of those thousands or millions of pieces become projectiles that start destroying all of the other satellites in the orbit. And it just renders space useless. You can no longer leave the atmosphere of Earth and you can't send anything up. You can't get through it and nothing survives that projectile field. So with all these SpaceX satellites, that's a real risk. That's a real risk long-term in regards to Kessler syndrome. But we're a long way from that right now. I'd like to see us make some money on this stock. Look, bar that, I think Elon's going to do big things. You're going to have quantum computers probably in space. I was talking to IBM about that last October. It's cold. You need really cold atmosphere for quantum, and space has it. You're going to see data centers up there. Again, the coldness helps out a lot. So there's a lot of great things that's going to happen, but there's some danger there too. Still exciting times nonetheless. So those are the big headlines that move markets this week. Are we out of the woods? I'll say this, the market held, the S&P held 7,200 in the middle of the week. And that's a real big, heavy area of support, and it held it. And it bounced up really strongly off that level when the news broke about Iran. But I'm not sure we're out of the woods yet. We lost the 20-day moving average. I also saw a report this week from one of our other technicians that we subscribe to. They're really fantastic. They were highlighting the fact that the moves that the volatility index made along with the market action this week, when we've seen this type of activity in the past, it has usually meant a 15% decline at some point in time in the relatively near future. Not necessarily next week or so, but next few months. So I just don't think that we're out of the woods at all on the volatility in this market and the potential downside in this market. So what does that mean? It means we're just going to stick to our guns. We're going to stay incredibly disciplined with our diversification, and we're going to slowly work in new money. That's what we did this week. We added to some things that were down and out where it made sense. We'll continue to do that sort of thing, but we're not getting all bulled up and just chasing after the stock market right now. We're going to wait, let it come to us, let it pull down, wait for better opportunities. I think that's the smart thing to do at the moment. So I'm going to go and wrap up. Between now and next few meetings, you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe take that big cruise, Mike, and it's fine, dude. It's not a problem. I didn't say no, man. I did not say no. Hey, maybe it is get that Airbnb, take that big trip with your family. You know what your goals are. Don't just think about them. Think big. Think B-I-G. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.